Dear students, welcome to my channel. In this video, I have explained company accounts, book back exercise sums 1 to 5, 15, 19 and 20. Don't skip the video, watch fully, then only you will be able to solve the sums by yourself. If you have not subscribed my channel, please subscribe and share with your friends. Now, if a company wants to raise capital through public issue, they will undergo all these process. Company first they follow the guidelines given by the Securities Exchange Board of India. First, they have to invite the public for the contribution of their capital by issuing the prospectus. So, the prospectus will give the detailed information about the company. So, the public first they'll go through the prospectus. If they are really interested to buy the shares, they will apply. So when the interested persons apply, they have to apply along with the application money, and this will be deposited in a scheduled bank. The applicants only will deposit directly into the bank within the time specified in the prospectus. And next is then the company will see whether they have received the minimum subscription stated in the prospectus. Minimum subscription is 90% of the capital. If they have received minimum subscription, then the company will allot the shares. If the company has not received a minimum subscription, all the application money received will be refunded to the applicants. The company may issue equity shares either for cash or for consideration other than cash. Even for kind also they can issue the equity shares. We are going to see both the types in our syllabus. And this issue of shares for cash, that has two types. In installments, the cash may be received in installments or at one time, a lump sum. These two also we have in our syllabus. And in issue of shares for cash in installments, it has got the following installments. Just see, the application money, receiving application money is the first installment, first stage, and second is the company will go for allotment, and third is first call, and last is final call. Here four installments are there. Each installment has two entries. Okay, one is bank entry, that is receiving the money. In the first stage only bank entry will come first. Okay, because the applicants, those who are interested to buy the shares, first they will apply for the shares along with the application money that they will deposit into the bank. So that's why application money stage, bank entry will come first, and whatever money deposited in the bank will be transferred to the share capital account. So in first stage we have application money received first, and then transfer of those application money into share capital will be the second entry. From the second installment, first entry will be allotment money due. Okay, and then second entry would be the receiving entry, bank entry. In the call money also the same stage. I will show that. After allotment, then whenever the need arises, call can be made. So call is a demand made by a company, to the shareholders to pay for the further installments towards the shares purchased by them. There may be more than one call. The calls will be differentiated by serial numbers such as first call, second call, third and so on. But the last installment will be the final call. So the words and final will also be added to the last call. For example, if third call is the final call, then it will be termed as third and final call. Suppose if the first call would be the final call, first and final call will be written there. Now here, issue of shares for cash in installments. The company can issue cash at par, issue shares for at par, or it can issue at premium. Issue at par means when the company issues shares at face value, or nominal value, that is called as issue at par. When a company issues shares more than the face value, okay, then that is called as a shares issued at premium. That excess amount is called as premium. This premium will be kept in a separate account called securities premium account. Now we'll see the journal entries for the issue of shares for cash at par. I told you earlier, each stage, each installment will have two entries. See, the first installment is application money. First is bank account debtor to equity share application, and then second entry is transfer of this equity share application to equity share capital. Now you see, to memorize easily, first entry is this. Every stage, you know, if it is an application stage, this application will come twice. Okay, one in credit and another entry it will come in debit. Okay, so easily you can follow that. Receiving entry always have bank. Transfer entry or due entry have a share capital, and in your syllabus, according reduced syllabus, you will always have equity share capital in credit only. So with this, all this clue, you can easily memorize the entries. Sometimes you may feel how to keep in your remember all these entries. So confusing it is, you may think. So you can have like this. In each stage, suppose it is an application stage, means application will come twice. Okay, in one entry it will come in credit, in another entry it will come in debit. Like that you can easily remember. Okay, now the third entry here is, if the excess application money is rejected, refunded, then this entry will come, equity share application account debtor to bank. So easily you can remember. The first entry will be passed in a reciprocal way. Okay, reciprocal manner. That is, receiving entry is bank to equity share application. When you are returning the money to the applicants, equity share application to bank account. Like that you can have some clue to remember all these entries. Now the second stage, allotment stage. So equity share allotment will come twice. So in one entry it is coming in the, see, in the first entry here it comes in debit, so in another entry it will come in credit. So in that way you keep it in your mind. And equity share capital always come in credit only. Okay, here now just see this. And then call money also. Now this is call money stage. Here equity share capital in this entry debit it has come, so in the next entry it will come in the credit. So like this you can keep it in your mind. Now we'll see the first one. Here issued Progress Limited issued 50,000 ordinary shares, that is equity shares of ₹10 each, and it is payable. It is given in installments, ₹2 on application, 4 on allotment, 2 on first call, and 2 on final call. Always when you read the sum, you compare the shares issued and the shares subscribed. Here shares issued 50,000 shares and all the shares are subscribed. That means what? All the 50,000 shares are subscribed. Okay, there is no under subscription or over subscription, and all the amount due were received. Okay, so now we are going to do the sum. Here 4 installments are there. First is equity share application, bank to equity share application. I have used the date column to put the number here, 50,000 into 2 and 1 lakh. And then transfer entry is equity share application account data to equity share capital, application money transferred. And next, second stage is allotment stage. Here the allotment money is ₹4. So ₹4 for 50,000 shares, 2 lakhs. So equity share allotment to equity share capital. Here allotment money due. And receiving the allotment money, bank account to equity share allotment, same amount. And allotment money received. Now the third stage, equity share first call. Here the call money is ₹2. So 50,000 into 2, 1 lakh. Now the entry goes like this, equity share first call to equity share capital. Now receiving the first call money, Now the fourth stage, here the amount is 2 rupees. So again 50,000 into 2. Equity share final call account data to equity share capital and bank account data to equity share final call. So like this you should do. Now second sum is under subscription. You just compare Sampath company issued 25,000 shares at rupees 10 payable. All the bifurcation is given. 3 application, 4 allotment, 3 on first and final. The public subscribed for 24,000 shares. Okay, now here under subscription. So whenever under subscription is there, you should go for the number of shares subscribed. You have to take into consideration for all the calculation the number of shares subscribed, that is 24,000 shares only you have to take. Okay, now let us do here first entry is bank account data to share equity share application. Here this stage 3 rupees is the amount, so 24,000 into 3 72,000. And next second stage 24,000 into 4 rupees, allotment stage is 4. So equity share allotment is 96,000 to equity share capital, allotment money due. And next is bank entry, receiving the equity share allotment. And next is the only 3 stages here. Third installment 3 rupees. So again 24,000 into 3 72,000. Equity share first and final call to equity share capital and receiving the equity share first and final call money. Now the oversubscription. See, when oversubscription comes, what is oversubscription? When the shares issued, when the shares applied are more than the shares issued, then in that case it is known as oversubscription. This can be done by 3 ways. First one, what they do, they reject the excess application. Totally they will reject. Okay. In the second one, they have received more application, they will allot in a proportion. Okay. Suppose for example, if a person has requested for 100 shares, he may be given 60 shares. Okay, they may have some ratios, proportions. So based on that, they will equalize all the excess application into the issued number of shares. Okay, in that case, excess money paid by the applicants will be adjusted towards the allotment. So in this stage, excess application money may be returned or it may be kept and it will be adjusted towards the allotment money. That is the second stage. Third stage is using the first and second, both the combination of both the type. They will reject few applications and the remaining excess application money will be adjusted towards the allotment. So like that. So we'll see first method. Saranya, the limited issued 20,000 shares. See, after seeing this issued number of shares along with the, you have to compare with the application money received. See down, it is given 30,000 shares. See, 30,000 and 20,000. So 10,000 shares are excess money they have received. Okay, application money they have received. So first entry, what you should do, you have to put calculation for 30,000 only, because they have received application money for 30,000 shares. And here the case is they are rejecting the excess application money application and they are refunding the excess money immediately. Okay, now see, the shares offered is 20,000. Application money we have received is for 30,000 shares, and excess application money that is for 10,000 shares are refunded. Now we'll do the calculations like this. First, you always remember in oversubscription, first entry you have to write for the application money received, excess. Okay, so 30,000 shares, for 30,000 shares they have received application money. So first we have to show that 30,000 into 3, 90,000, and here application money received for 30,000 shares, you should write it in the narration. But actually we are supposed to have only issued shares. You can allot only for the shares offered, not for more shares. Okay, So shares offered is 20,000 only. So the second entry should be passed only for the offered shares, number of shares. That only you have to take into consideration. 20,000 into 3, that amount will be transferred to share capital. In this case, the excess application money are refunded. So the first entry will be written reciprocally in this stage. Equity share application account data to bank account. The excess money is rejected. Now the remaining will be calculated for 20,000 only. That is the shares offered or issued shares. Okay, 20,000 into here allotment money is 4 rupees. So equity share allotment to equity share capital, bank account data to equity share allotment, and next is for 3 rupees, 20,000 into 3 equity share first then final call to equity share capital, and bank entry you have to pass like this. Now in this fourth sum, Gaja Limited issued 40,000 shares of rupees 10 each to the public, payable rupees 2 on application, 5 on allotment, 3 on first and final call. Here the company is receiving 50,000 shares, that is 10,000 shares excess of the shares offered. Okay, then what they are doing, you have to further read. The directors decided to allot 40,000 shares on pro rata basis. That means they are not rejecting any of the excess shares, but they are going to adjust on the proportion, some proportion they may have. So accordingly they will allot shares for all the applicants, and the surplus application money will be utilized or adjusted towards allotment. So that is the over subscription, first type in that. Okay, so we'll see the calculation. I have done the calculation like this. See the question I have displayed on the top. See, 40,000 shares they are issuing, but 50,000 shares were received. So first thing you have to write the received application money. For how many shares the applications money were received. So 50,000 into 2, that is 1 lakh, but actually only 40,000 they have to keep it. Okay, that will be transferred. So 40,000 into 2, 80,000 less application transferred, and when you subtract these two, you will get 10,000 excess shares amounting 20,000 rupees. Okay, this they are going to adjust towards the allotment. So side by side you can put calculation for allotment money. See, allotment money due for 40,000 shares at the rate of 5 rupees, 2 lakhs. Okay, then already the excess application money is there. Okay, so that you have to subtract. So for when you subtract, you will get 1,80,000. So this money will be collected on allotment. I hope you understood this. First, what you should write is, first how many applications they have received, that you have to take it as 50,000 into 2. First that entry will come, and then but they are allowed to take only 40,000 shares, because whatever they offer, that only they can keep it. Okay, the excess shares will be adjusted on pro rata. Okay, so 40,000 shares will be 80,000 rupees, and excess application money will be adjusted to allotment. See, if you write like this working notes, so one by one you can pass journal entry. For application received, bank entry, bank account data to equity share application, and for transfer entry, equity application to share capital, and then excess application money, that is equity application money will account data to equity share allotment, and then due entry. Here allotment money due is there, no? So for that you have to write equity allotment account data to equity share capital, and this already we have passed, so no need to pass the entry. Here amount to be collected, this amount will be shown on the bank entry. Allotment money received, you will pass one entry, no, in that entry you have to show. I will show you here. I have taken again the calculations so that you will understand. See what we have written on the previous slide that I have shown here. See, application money received. See, bank account data to equity share application and transfer. Only 40,000 only we can transfer to share capital, and excess application money will be equity share application to equity share allotment. Now the allotment calculation we did, that I have shown on the top. See, equity as usual. Later, as usual, you have to pass the due entry, bank entry, like that. See, 40,000 into 5, equity share allotment to equity share capital 2 lakhs, and bank entry. Okay, when you receive allotment, you will receive only the subtraction. You have to subtract the excess application money from the due money, then you will get 1,80,000. That only you have to receive. Now, as usual, first and final call, you have to write equity share first and final call, and to equity share capital account, and then receiving the equity share first and final call. Okay. Now, fifth sum. It looks like this. That is, they have given, see, Lalita Limited offered 30,000 shares, and it is payable 2 rupees on application, 3 rupees on share allotment. Only 2 installments they have given. The call money no need to show now. Now see, they have offered 30,000 shares, but they have received 50,000 shares. And here they are doing, for 10,000 shares they are allotting fully. For 35,000 shares they are allotting only 20,000 shares, and here in this group only they are going to adjust the excess application money for allotment, and 5,000 shares they are rejecting. They are not giving anything to them. Okay, in like see, they have given 10,000 fully, they have allotted. For the next group, 35,000 shares, they are allotting only 20,000 shares, and excess money will be adjusted towards the allotment. And the remaining 5,000 shares, they have not at all offered anything. So let everything be like this. But you do the calculation what I told in the previous sum. Same, you don't consider everything. First you consider 50,000 extra. Okay, that is 30,000 for issuing 30,000 shares. We are receiving application money for 50,000 shares. That alone you consider. And then how many they are rejecting? Only 5,000 shares they are rejecting. I will show you the this thing calculation. You put better calculation, but in the textbook one calculation is given. That is, instead of that you can do this. Okay. So 50,000 shares, application money is 2 rupees. For that we are passing the first one, and actually application should be transferred is 30,000 only. How much is offered, that much only we can have it. We can transfer to share capital, so that you subtract. So you will have 20,000 shares excess. So in this 5,000 shares are rejected. That alone you consider. Don't see all these things. 35,000 shares, 20,000 shares are allotted. Here no need for us to do. Only thing you see how many shares are rejected. That you subtract. Then the remaining 15,000 shares are adjusted towards the allotment money. I hope you understand this. See, application money received for 50,000 shares first you consider, and application transferred is 30,000, that is share offered, and the remaining 20,000, how many they are rejecting, that you see. They are rejecting 5,000 shares. That alone you subtract. The remaining amount fully adjusted to allotment. So simultaneously you do the allotment money calculation also. Allotment money due for 30,000 shares at rupees 3 is 90,000. Already we have excess application money, that you subtract. So remaining amount to be collected on allotment stage is 60,000. So now when you work out like this, so each you have to make an entry. For application received one entry, transferred another entry, and application money refunded one entry, and excess application money adjusted to allotment one entry, and then allotment money due one entry, and then amount to be collected. So one by one you can pass the entry if you do the calculation like this. Now I will show you. See, first entry is application received. For 50,000 shares, 2 rupees, you have to pass the first entry. Second entry is amount to be transferred to share capital is only for 30,000 shares into 2 rupees. This you have to transfer, and how much any application they have rejected, that is 5,000 shares into 2. And now see here, allotment money due, we have to pass the entry like this. And next is you have to this excess application money, you have to pass this to allotment, that is you are adjusting towards share allotment, that entry you should write. And allotment money due, you have to pass the equity share allotment to equity share capital. And next is this 60,000 will be collected in the receiving allotment money. Now shares are issued at premium. When a company issues shares at a price more than the face value or nominal value, then shares are said to be issued at premium. The excess is called premium amount, and it is transferred to securities premium account. Now we'll see this premium can be collected in the application money stage, or it can be collected in the allotment stage, or even in the call money stage. Okay, when they are collecting in application money stage, first entry you have to add the application money and the premium money together and put as usual bank account data to equity share application. When it comes for the transfer entry, there only you have to show the securities premium account separately. Okay, you remember like that. Bank entry will never have the securities premium, only along with this equity share capital. When you transfer, that time only it will be shown. If it is collected in the allotment stage, what you should do is you should add the allotment money. Suppose if it is collected on the call money, that call money plus premium amount, that will come in the first equity share allotment. And then equity share capital, only the allotment money will be transferred, and securities premium, only the premium amount will be shown here. And bank entry totally you have to show. Okay, we'll see the sum. Here Vishwanath Furniture Limited invited 20,000 shares, rupees 10 each, premium rupees 10. Okay, so 2 on application, 5 rupees, that is it includes premium amount also. That means what? Premium is what? 2 rupees. So 3 plus 2. So 3 is allotment money. Along with the premium, it amounts to 5 rupees. And 5 rupees on first and final call. Now you just see there are over subscription. Okay, how many shares? 10,000 shares extra. But we have received money for 30,000 shares. So first entry should be 30,000 shares only you have to show. And we have to read further what the excess application money they are doing. They are rejecting. So we have to give the rejection entry. Now see, first always remember, if you are receiving over subscription means that for that number only you have to show the first entry. 30,000 into 2, 60,000, and you should write it is received for 30,000 shares. And actually we need to have only 20,000 shares, that you have to show it in the transfer to share capital. And the excess application is refunded, so you put refund entry, equity share application to bank, 20,000 rupees. And now here in allotment stage only they are collecting the premium. First you have to equity share allotment. What you should write? allotment money plus premium. So 5 rupees you have to show the calculation. Next is equity share is, that is allotment money is 3 rupees only. That you have to put it in the capital column, capital, that is that account. And premium amount you should put it in the securities premium account. So bifurcation you have to do in this due entry only. So now you write allotment money due with premium. When you come for the receiving entry, there no bifurcation is required. You put bank account data to equity share allotment. Here share allotment money, what you write, that you write here, share allotment. Okay, don't confuse with these two. You look only this allotment, what you have given for allotment here, same amount should be recorded here. And now as usual for the first and final call, 20,000 shares into 5 rupees, you have to do this. Now we are going to see the shares issued for cash in lump sum. So far we saw in installments. Here lump sum, there are some entries, only 2 entries, okay. That is application money, bank entry and the transfer entry. Suppose if the shares are issued at par only, you have to write bank account data to equity share application and equity share application to equity share capital. That's all. When the shares are issued at par. When the shares are issued at premium, then you have to show the securities premium account in the second entry. See here, bank entry will never have the securities premium, bifurcation will not come there. So in the second entry you have to show. Okay, we'll do the sum. Students, this sum is a most expected question, so somehow you learn this, don't skip this. Okay, some students may think that I am going to ignore company accounts. Don't do that. These sums are very important, and only 2 entries are there. Okay, Abdul Limited issues 50,000 shares. Here no over subscription, under subscription at all. Okay, so easily you can do 50,000 shares of rupees 10 each. So one lump sum. Okay, but it is issued in 2 ways. Okay, at par and then at a premium. So first we'll do for par, issued at par. First you write the in the books of Abdul Limited journal entries, issued at par. Only 2 entries will come. Bank account data to equity share application, 50,000 into 10 rupees, lump sum. Okay, so no installments here. Okay, now this will be transferred to share capital. See, equity share application account data to equity share capital. It's very easy. Only first 2 entries you should write. And next is when it is issued at premium, what you have to do, premium amount is 2 rupees. So you have to add 10 plus 2. Already in the first case what we have done, it issued at par. That is in the question what it is given, shares at rupees 10 each. 10 rupees, the face value of share is 10 rupees. That 10 plus premium amount you should add. So in the first entry what you should write, 50,000 plus 12. Okay, 10 rupees plus 2 rupees premium. So first entry should be shown like this. And second entry you have to show the bifurcation, that is equity share application, what you have written, 6 lakhs, that same 6 lakhs you have to put. And equity share capital, equity share value is what, 10 rupees. So 50,000 into 10, 5 lakhs. Premium amount is what, 2 rupees. So securities premium 50,000 into 2, like this you should do. That's all. For 4 entries you may be expect this question in 5 marks. So easy to do this. Next is, it is issued for other than cash. See, suppose a company is buying an asset. Okay, instead of paying in cash, they are paying shares. They are giving their shares for the vendor, or sometimes this may be happen for the promoters for the services, and for the brokers, underwriters for their commission. Instead of paying them in money, they can give their shares. Okay, so the entries are like this. When you purchase an asset, okay, the respective asset, suppose for example furniture or building, or anything, okay, whatever asset is given in the sum, that you write. And to vendor who is giving us on credit, the creditor name will come, okay, vendor account. And when we are paying them not in cash, by shares, okay, for their claim, okay, suppose 4 lakhs we have bought and equivalent to 4 lakhs we are issuing them the shares, that is the second entry. So that time here the creditor, the vendor is the creditor, okay, he will be debited here and share capital will be credited. Here application will not come, you have to keep it in your mind, okay. Why application is not come? They are not applying, only we are giving to them, okay. So application word will not come. Equity share capital, and if this shares are issued at premium, then that premium you have to show here, okay. We'll do the sum. Issue of shares for consideration other than cash. Paradise Limited purchased assets of rupees 4,40,000 from Suguna Furniture Limited. It issued equity shares of rupees 10 each, fully paid in satisfaction of their claim. Here, if the entries are issued at par and at premium of 10%. Okay, now we'll see this. First, you have to pass an entry for the purchase of asset. Here they have given asset only. Okay, so assets account data to from whom we are buying, Suguna Furniture Limited. You credit their name. And next thing is next entry, we are going to pay them in shares. Okay, so Suguna Furniture Limited you are debiting, and then equity share capital you are crediting. Now to find out how many number of shares we are issuing to them, you do the calculation like this. Whatever amount we have bought, that amount should be divided by the value of shares. Here at par 10 rupees is the share. So 4,40,000 divided by 10 will give you 44,000 shares we are issuing to them. And next is issued at premium. Here premium is given as 10%. So 10% should be taken as 10% of 10 rupees. So how will you calculate this? 10 by 100 into 10 rupees. When you simplify this, you will get 1 rupee. So issue price is now 10 rupees. Already face value is 10 rupees. We are selling at rupees 1 extra. So 10 plus 1, 11 rupees here. Okay, so when you divide 4,40,000 by 11 rupees, you will get the number of shares, 40,000 shares. Now you pass the entry. The first entry will be same. Assets account data to Suguna Furniture Limited, 4,40,000 you will be writing. And here Suguna Furniture is debited. Equity share capital, that is face value of the shares. Here we have found out 40,000 shares, isn't it? 40,000 into 10 rupees is 4 lakhs. Securities premium is 1 rupee. 1 rupee into 40,000 shares, 40,000. So this is the entry. So like this. Students, I hope this video will be useful to you. And you practice, continuously you practice. You do illustration sum and then come to exercise sums. Okay, so when you practice, automatically all the journal entries will be by hearted, and do with understanding. And these two last 19 and 20 are most expected questions, and you have to prepare, you have to practice. Practice is very important. And one more thing is, it is given in page number missing information. Okay, it is given in page number, I will tell you the page, 261. That also don't forget to practice. It is given in the student activity 7.4. That also you do. These questions are expected questions. Thank you, students, for watching. Before I end the video, just I have given points to be remembered. First entry, always you have to pass application money received, and second entry if it is over subscription, in that case I am saying. And next, transfer entry should be always on the number of shares issued or number of shares offered. Third entry should be if there is any rejection, then refund entry will be passed. And if the excess application, if they are not rejecting, and if the application money is adjusted to allotment, then you pass the allotment adjustment of allotment money, application money to allotment, that you have to pass. Okay, I hope this video will be useful to you. If you like this video, you can even share with your friends. Subscribe if you have not subscribed yet. Thank you.